Welcome to the Resilient Retail Game Plan podcast. Hi, it is episode number 248. Hi, I'm Catherine Erdley. I am your host today, as well as the founder of the Resilient Retail Club. The Resilient Retail Club is my membership group, also my one-to-one offer, and my done-for-you services for product businesses, whether you are an independent retailer or an e-commerce business. You can find out all about what I offer at resilientretailclub.com. But today I want to talk to you about a very important subject that many people find it awkward or difficult to talk about, or maybe we just don't hear that much about it being shared by other business owners. And that is all about paying yourself from your product business. What I want to do is walk through why it is perhaps not as easy as it might sound, what some of the common pitfalls are when it comes to paying yourself from your product business, and how you can overcome those. And I want to use this opportunity to bust through some myths, as it were. So to really have a think about some of the things that we expect. The first off being that as we grow, we're going to be immediately able to pay ourselves more, and why that just isn't the case. So you may have hit six figures in your business, and you may still be in a situation where you're not always paying yourself properly, while your cash flow feels chaotic. And we're going to have a think about some of the reasons behind that and the things that you can do to change it.
Welcome to the Resilient Retail Game Plan, a podcast for anyone wanting to start, grow, or scale a profitable creative product business with me, Catherine Erdley. The Resilient Retail Game Plan is a podcast dedicated to one thing: breaking down the concepts and tools that I've gathered from 20 years in the retail industry and showing you how you can use them in your business. This is the real nuts and bolts of running a successful product business, broken down in an easy, accessible way. This is not a podcast about learning how to make your business look good. It's the tools and techniques that will make you and your business feel good. Confidently plan, launch, and manage your products, and feel in control of your sales numbers and cash flow to help you build a resilient retail business.
The first thing I'd like to say is that 100% one of the most difficult things about running a product business is that the majority of the information that's out there is really aimed towards service business owners. And it's part of why I do what I do. The reason that I talk so much about your profit margins, the cost in your business, and how to basically generate more profit is because I'm really, really passionate about people being able to support themselves financially from their businesses. But chances are, if you're in Instagram or you're in other general business groups or organizations that cater towards small business owners, and you hear people who are talking about paying themselves, the chances are they're not going to be product businesses. They tend to be service businesses. So the majority of the people who will talk about, my 5-figure month or my 6-figure business and the lifestyle that it gives them, usually, and please do point out if you find people who contradict this, but I'm willing to bet that most of the people that you hear talking about how much they make in their business are not product business owners. And fundamentally, the costs involved in running a product business compared to those involved in running a service business are completely different. Now, you could argue that product businesses are more scalable than service businesses. It's easier to increase the volume and grow your top line revenue as you go along for a product business owner, because you're selling more of the same thing or to more people. But the costs piece of it is really tricky and really difficult. So, for example, if you're a service business owner, you may have costs around people that you employ in your business to help you. But the chances are, fundamentally, it costs you a lot less to deliver a service than it costs you as a product business owner to sell a product. And even if you're somebody who has got really phenomenal product margins, still 25 to 30% of your revenue has to go on those product costs. And probably for most people, around 50% of their revenue is going on their product costs. So you can imagine that when it comes to what's left over for the founder, it tends to be a lot more squeezed for product business owners. In fact, if I had to give a very rough estimate, I would say that if you're taking home around 20% of your overall turnover, then you're probably doing really well. I know people who are taking home a lot less than that. So if you are at that 20%, that's probably pretty good going, which if you think about it, if 50% of your turnover is going on the cost of goods, it's no surprise that it would be difficult for you to be taking home much more than 20, maybe 25% of your turnover as your take-home pay. So you can see that that's already very different from someone who's a service business who just doesn't have that cost of goods sold in the same way. So first off, it's just to really say that if you hear people talking about paying themselves from their business compared to their turnover and talking about the lifestyle that it affords them, the chances are it's a very different kettle of fish for you as a business owner. That said, I don't want to make it all sound doom and gloom. There is more opportunity, I believe, for product business owners to scale. It's just that you have to really keep an eye on those costs as you grow to avoid you just being in the same situation in terms of being able to pay yourself. So that's one of the kind of key money myths that I'd like to address in today's episode, is that, sales is not the same as profit. I think hopefully we're all getting much clearer on that, much more savvy that when people talk about their six-figure business, that's their turnover, it's not necessarily their profit. And for most business owners, there's quite a big gap between the two. It can feel though, especially if you're at this point where you've grown your business, maybe you've hit that mythical six-figure number and you're thinking, right, surely now I'll feel secure, but you actually still feel like you're winging it. And the reason this happens is because you're probably still focusing on your top line sales. You may not be as focused on your margins, and you certainly may not necessarily have a full cash flow mapped out. Now, some people do. A lot of people I talk to don't, which means that you get into this situation where you're trying to base your decisions about purchasing off your bank account, saying, okay, well, I think I've got money in the bank, so I think I can spend it, but not really having that future visibility that, some of that money was actually for my taxes, some of that was for invoices I've already placed, all those other reasons. And stock is a huge part of that. Even if you're somebody who makes to order, then just the cost of the stock itself is going to be seriously having an impact on your profit, your bottom line. And I often talk about there being two things that really determine how successful a product business is or how profitable it is. The first one is, are you making enough money every time you make a sale? So are your profit margins decent? And the second one is how quickly you get your money back compared to when you spend it. So in other words, if you're paying your suppliers 6 months before you get that money back from a customer actually buying the stock, then it makes your cash flow much harder to manage. And often people have a lot of money tied up in stock, which means that it's much, much harder for them to really manage their overall cash flow, their expenses, and to be able to take that money out for themselves. So, if the suppliers are getting paid before you do, it can be really tricky to then put your foot down and say, right, I really want to pay myself from the business. So what actually helps with this? Again, I'm always keen to give you the information for action as opposed to just telling you why it's so difficult. And what I really want to stress here is not that, it's so difficult, but if you have been finding it difficult, then you are not alone. And there are really good reasons why you find it tricky, but there are lots and lots of things that can help. And in my program, Retail by Design, where I work with business owners one-to-one, cash flow is something that comes up a lot. I would say probably half to 2/3 of the businesses that I work with, we actually put together a cash flow forecast and they go through it and they learn to forecast out their sales, really forecast out their expenses, forecast out their stock expenses as well based on their sales and stock plan. And it just gives them this visibility, which makes such a big difference. I'd say the number one thing that people say to me after they've done their cash flow, and this definitely can take some time to get used to it, but we're able to work back and forth until they're in a position where they really understand it, they can work with it. Usually the first thing they say to me is that I wish I had this earlier. And I think that a lot of people feel that they would have made very different decisions in their business if they'd had this visibility with their cash flow at a much earlier point. So here are some things that can really help with this situation. The first one is knowing your margins. As I touched on earlier, there's this idea that the two main indicators for success or for profitability in a product business is, number one, are you making enough money every time you make a sale? And that's because when you think about your margins, the only place that you're making money in your business is the difference between what you're buying something for and what you're selling it for. That's the only place that you get income. Now, of course, you may have other elements to your business. Maybe you run workshops or offer services as well as selling your products. But if we're talking about a product business, if we're talking about a retailer, an e-commerce brand, the only place that you are making money in your business is the difference between what you've bought something for and what you sell it for. So that is effectively the engine for the entire business. Everything you do in your business, every expense that you have, every person that you employ, every packaging order that you place, every stock order that you place, that is all coming out of the profit being generated by the difference between what you've bought something for and what you've sold it for. And as a result, you need to be really, really clear on what that difference is, and you need to watch it like a hawk and just be really aware of it. When people come to me and they have issues with their cash flow, their overall profitability, then there are various different areas that we look at. One of them is things like their fixed overheads. One of them is how much stock that they have. But then one of them is how much profit are you making every time you make a sale? Are your best sellers high profit items? Are there adjustments that we can make to improve your overall profitability? These are all things that are really, really crucial, because the more that you have a profit as what I call your out margin, so the difference, your actual sales margin, the amount of profit or percentage profit that you're making on your sales, the higher that is, then the easier everything else becomes, the more money there is left over. And many, many years ago, I think probably in about 2019, possibly even 2018, when I first started out on Instagram, I had a reel that went, I'd say viral for me at the time. It probably got about 60,000 views, and it was a cake. And basically the idea was that when you sell something, that selling price, say it's £10, there's a portion of that that then goes to taxes. There's a portion of that that then goes to cover your costs, your fixed costs. There's a portion of that that goes to covering your salaries. And then there's what's left. And is it going to be crumbs, or is it going to be a decent slice of cake? And I think people liked it because it was a visual representation of how much the impact on your profit margins on your overall business. So it's very, very hard for you to build a successful business, a profitable business, if your margins aren't right. So if you're sitting here thinking, yeah, do you know what? I don't pay myself enough. I really would love to pay myself more. Then one of the things that you need to do is double check your margins. And the second thing that can really help is planning out your sales and stock. And that is having a sales plan. So number one, you know how much you're actually expecting to get in through the business, which is very, very important, and really hard to do yourself a proper cash flow forecast if you don't actually know what you're expecting to bring in. And then also helping you identify how much stock you should have based on that sales plan. So one of the questions I get asked a lot is, how much stock should I have in the business? And the answer is always, well, what are your sales? What are you intending on doing with your sales? And that's really, really important, because you can easily get yourself in a situation where you've got too much stock because you haven't linked those two things together. You haven't linked your stock plan to your sales plan. So you're just ordering stock, but you don't know whether you're actually expecting to sell it or if you're going to be stockpiling. And sometimes you can end up in a situation where you don't have enough stock. And this is something that, again, several years ago, I worked with Lucy and Yak, the dungaree brand, on a situation that they were having at the time, which was that some of their key best sellers, they were kept going out of stock because they were finding it difficult to really forecast that demand. So we did some demand forecasting work to make sure that they had enough stock to hit their sales, and that they weren't in a situation where they kept running out, because running out of stock consistently is leaving money on the table. Too much stock is choking up your cash flow. So neither of those are great. And one of the things that really helps you overall with the visibility of your business, the ability to make decisions like paying yourself, and the ability to really understand what's going on under the hood of the business, that all comes from having that sales and stock plan. It can stop you panic buying. It can stop you having feast and famine cycles where you've got stock coming in and then you're out before your next launch. But equally so, it can stop you stockpiling, which will have a really, really big impact on your overall cash flow. And then the third thing that I would really stress, the third habit that really helps with this situation of really managing the way that you pay yourself from your business, is to prioritize paying yourself. So you need to have a plan. You need to know how much is coming in. You need to know how much is going to be going out. You need to make sure that you're not spending too much on stock, because that can really just eat up all of your cash flow. And you need to make sure that the stock that you're selling is a decent enough profit margin that you've actually got some money to play with once the sales have been made. So all of those things are really key and really important. But if you don't prioritize paying yourself from your business, then you will also be in a situation where you're just going to keep plowing that money back in. So part of paying yourself more from your business is putting your foot down and saying, I need to be rewarded financially from this business in a way that is in a level with the effort that I put in. And a lot of people, I don't really know where this belief has come from, but a lot of people feel like the best thing that they can do for their business is to reinvest money in as much as possible. And I believe that's actually counterproductive, and for two main reasons. Number one, it doesn't encourage you to be super disciplined about the stock that you're buying, or it means that you're maybe slightly less disciplined than you might otherwise be, because there's a bit more wiggle room. You can say, oh, well, I'll take that money I was going to pay myself and I'll buy stock, instead of saying, do I need this stock? Is there another way for me to raise the money to get this new stock? Have I got some old stock I could sell? So number one, it doesn't encourage you to really have that discipline in your business. And number two, is really, really hard to run a business and put the amount of work and effort in that is required for running a product business. It's really hard to do that if you're not paying yourself enough. And I've seen it maybe 3 years in, maybe the first 3 years you're kind of going on adrenaline, but then, some point sooner or later, there will come up a day where you just think, right, well, actually, am I better off getting a job, and based on my hourly rate, this is not a great situation. So I'm a huge believer that we should be able to support ourselves from our product businesses, from our creative businesses. And part of that is insisting that we pay ourselves and taking that money out as a non-negotiable and trying to work out, make things work basically effectively. So your salary isn't what's left over. It's a very important cost. And often when I'm working with people inside my one-to-one program, Retail by Design, one of the things that we look at is a break-even analysis, which is all about understanding the costs in the business versus the sales. And one of the things that I insist people put in is the cost of their salary, or how much they would like to pay themselves, not even how much they currently pay themselves, but what would you like to pay yourselves? Okay, therefore, what do we need to do in terms of sales, profit margin, etc., etc.? Because I think it's really, really important. It's not selfish. It's not greedy. It's certainly not greedy. I think most people running product businesses don't pay themselves nearly enough for the amount of work that they do. So it's essential for the sustainability of your business. And we talk a lot about sustainable businesses. Many people say that they want to have a business that's sustainable. But sustainable also means that you can keep doing it. You can keep doing it. You can keep going. And it's very hard to keep going if you're not paying yourself enough. So those would be my top 3 suggestions for changing your relationship with paying yourself from your business. So number 1, knowing your margins. Number 2, having a really good plan for your sales and stock, as well as your cash flow. And number 3, prioritizing paying yourself. Why is this difficult for people? I think, again, I would just want to really stress, if you're listening to this thinking, oh, I should have got this figured out by now, I really should know better. Do not feel like that, because it is an extremely delicate balance and something that we have to learn, and probably a skill set that most of us would never have learnt or never been even had to grapple with if we didn't have our own businesses. And yes, of course, everyone has to run their own personal finances, but for most people, there isn't that extra level in their personal finances that you have in your business when you might have to pay a big invoice to a supplier or work out the best time to bring in a certain product or all of these other things all together. So some of the fears things that happen that come up when I talk to people about this is people say I'm not a numbers person. That's something that comes up a lot. Or they feel like they just don't have the ability to really wrap their head around their business numbers. And what I'd always say to that is none of it is complicated. When you really boil it down to the step-by-step of creating an effective cash flow, an effective plan, effective strategy for your business, none of it is complex maths. It's not like we have to do algebra or anything like that, or anything that actually, to be honest, that looks like my children's GCSE or A-level maths. A lot of it is about, okay, what have I got coming in? What have I got coming out? What are my incomings and outgoings? Effectively, all your cash flow is. So it may be that you have to really focus on doing the numbers. And a lot of people find that that is part of the issue, is that the effort it takes to sit down and really engage their brain with these numbers is almost feels insurmountable. And I think that's, again, why the one-to-one work really is helpful, because we have time in our sessions to sit and do it together. And also, a lot of people find external accountability really helpful. So if they know that I'm going to be asking them if they put all of their bills into the cash flow forecast in 2 weeks' time, then that's a clear deadline that they can work towards. So for most people, I don't really believe in the concept of not being a numbers person. I know obviously there are people who really do struggle with numbers, but I think for the vast majority of people, it's just simply not really their comfort zone. So they'd much rather do almost anything else. And as a result, it kind of gets pushed to the bottom of the list. And yet it's the thing that probably would bring them the most freedom and peace of mind. Some of the other things that I've touched on already are fears about, I should just reinvest everything. I'm really going to be damaging my business if I take money out for myself. But, ultimately, and totally, I subscribe to the same philosophy as Mike Michalowicz, who wrote Profit First, which incidentally, if you've never read Profit First for your business, I really highly recommend it. It's slightly trickier to implement, I think, for product businesses, but I think overall as a philosophy, then go check out Profit First, Mike Michalowicz. I'll put a link to it in the show notes. But one of the things that he talks about is effectively your business should work for you and not the other way around. So if your business isn't giving you money effectively, then what's it for? It's really just there. That's what it's there for, is to pay you. So you're not going to be damaging your business if you're asking it to do the function that it's designed for. And then one of the other things that people really struggle with is just, again, finding the time to take the time to put that plan in. And also because it's just going to take that much longer if it's not something that you're comfortable with. And a lot of people find it very stressful trying to put together something like this by themselves. And they just need that extra support. So you don't need to be a CFO to manage all of this. I've worked with lots of people who didn't have a cash flow plan, or have even been running their business for years and years without a cash flow plan. And we've been able to put in a structure, a sales plan, a stock plan, a cash flow forecast, and it's made a huge amount of difference to the clarity, the support, and having a system that you can trust and you can make decisions about, and you can see, oh yes, I can take some money out for myself. I can take more money out than I have been doing. Because I've equally worked with people who actually have got, a fair amount of money in the business, but they're too nervous to take it out for themselves because they're worried they're going to need it. Whereas almost when you can demonstrate that actually, that this is what we're going to need, this is what you may need this or you may not need this, but we can demonstrate what we think you're going to need in terms of your product purchasing. And that can mean, okay, actually, yes, I feel more comfortable taking money out for myself. So when I work with founders inside Retail by Design, which is my new name for my mastermind program, I renamed it incidentally because one of the things that happened with it being called a mastermind was that a lot of people thought it was a group program as opposed to a one-to-one program. There is a group element to it. We have a weekly group call, but really at heart, it's a really fantastic one-to-one program and a way to work with me on an ongoing basis. So when I work with people inside Retail by Design, one of the first things we do is a full financial review. So we look at your margins, we look at your pricing, we look at your stock, we look at your reporting for your business, we look at what you've got in terms of a sales plan, a stock plan. We put together a cash flow forecast if that's something that you want to focus on or something that you don't already have. And we also look at other elements too, things like your support structure, who you've got in your team. We look at your overall strategy. We look and identify if there's anything missing in terms of your marketing, your product offer. We look at planning it all out. So basically, it starts, though, generally speaking, with that financial understanding of what's going on. And the beauty of working with me is that I've worked with over 200 businesses, product businesses, one-to-one over the last 7 years. And so as a result, it's something that I'm able to very quickly see the things that are working really well and the things that need more support. So it's never about making you feel bad. Sometimes people say, oh, I'm worried I'm going to get like my school reports. It's not about that. It's about giving you a full picture so you can really grow with confidence. And because ultimately, I don't want you to be sitting there feeling lost and feeling stuck. I don't want you sitting there not knowing if you can pay yourself. I don't want you to be not able to pay yourself what you deserve for the amount of effort and work that you put into your business. And so if you're listening to this and thinking, I want that clarity too, I want that support, then I do encourage you to sign up for a discovery call. It's very relaxed. It's just an opportunity for you to tell me more about your business. Retail by Design is especially well suited for people who are at the VAT limit or above. There's loads more details on my website. You can head over to resilientretailclub.com and find out more about Retail by Design. And there's a link there also to book a call. And you can also have a look in the show notes. There'll be a link to book a call there. So if it's something that you would like to get more support in terms of paying yourself, in terms of looking at your business in a more strategic, mapped out way, I would absolutely love to help you with that. And yeah, let's have a chat. So just to kind of recap then, what I want you to know is that running a product business, paying yourself sufficiently from it, it's not as easy as it may sound, or it probably seemed at the beginning. There are a lot of different bills that go out. There are a lot of different demands on your cash flow, especially when it comes to your stock. And it's really something that you need to have the right balance. You need to really understand your sales plan and your stock plan in order for you to have a really good handle on your cash flow. Once you have a handle on your cash flow and your profitability, you are able to make much better decisions about paying yourself. You're able to really identify how much money you can take out of the business, and also get really clear on what your sales need to be if the amount you're taking out of your business isn't as much as you feel it should be. Or also to understand, is that happening because you're spending too much money on stock? There's lots of different elements that can play into to you not paying yourself enough from your business. So it makes such a huge difference to people when they're able to look forward and say, in 6 months' time, this is what my bank balance will look like, as long as all of these things happen as I expect. And then to be able to adjust it on a weekly basis, adjust what sales actually came in, adjust what bills actually went out, adjust what you actually spent on stock. And so that you've always got an updated living picture of your cash flow and you're able to really make those decisions about the business. Personally, the way I make decisions about my business is I always run the numbers first. But because I've got that cash flow, because I've got that set up and the forward plan, it's something that I'm able to do and really play around with before I make big decisions. And I'm able to work my way around tight spots. I'm able to just anticipate when there might be pinch points. And it just is so super helpful. I personally couldn't run my business without that. And I know from the people that I've helped that it's really helped them feel much more calm and confident in their business when they're able to see those numbers mapped out. So if you want to know more about Retail by Design, then let's have a chat. Otherwise, if you have a moment to like and review the podcast, it makes a huge difference in getting out there in front of other people. You can rate it and review it inside Apple Podcasts, which is super helpful. You can also rate it inside the Spotify app. And of course, if you like or you follow or subscribe to the podcast, you'll be the first to know about each new episode on a Thursday morning. See you next week.